So I haven't made a video on NIO in over a year. The stock went from over $8 to under $4. So I've been completely right about not being invested in it due to multiple concerns that I've had. However, now I have put $10,000 into NIO stock and I have begun buying up shares. I recently saw this short clip which also contributed to my purchase.
The Chinese have created a car that, thanks to its innovative suspension, can do incredible things. On a comparative test, we see that the luxury Maybach S580, worth more than $220,000, is trying to drive through bumps. At the same time, there are many glasses of booze on the hood. Of course, no matter how luxurious and comfortable the car is, it is unlikely that it will be able to do this without spilling a drop. But as soon as the test queue reaches NIO ET9, something incredible happens. All this is thanks to its intelligent Skyride chassis with active electro-hydraulic suspension, which allows the 707 horsepower electric vehicle to shake off snow and overcome bumps on the roads as smoothly as possible. The NIO ET9 costs just over $110,000.
The main reason I purchased the stock is it's trading at pretty much the same value as the cash that NIO has on hand, so the company is now valued the same as the cash, which means there's actually no premium for the brand or any of the future sales. It's really just valued the same as cash, which is pretty insane if you think about it. Now, looking at some competitors, the landscape is a little bit rough right now. Li Auto announced last week that they're basically saying we're not focusing on massive growth, we're just focused on user loyalty. We also see Tesla coming down significantly with lots of volatility in the market, as predicted with the pullback. And taking a focus on NIO, we knew that this was going to happen. Well, at least they knew that this was going to happen, and they actually planned for this accordingly. They raised money last year, and this was a very smart thing to do because that's what you need to do to get through an economic slowdown. And the world is essentially in a recession, although it doesn't feel like it, because the US government printed a lot of money and just now is spending tons of this money. Now, NIO is in an interesting place right now as an investment, and that's why I decided to buy shares. And I think it's really important for you to listen up to this. Even if you're not invested in NIO, this has a lot to do with the industry as a whole. From one hand, I've been asked so many questions on my Discord community from my members, like why do so many people have electric cars and they're switching back to fuel cars again? Will this be the end for NIO, Tesla, and other EV maker stocks? The main concern people mention is the range of vehicles. The main concern people mention is the range of electric vehicles. However, NIO has 400-kilometer range. The fact that some people go back to gas cars is actually irrelevant, in my opinion, due to changing laws in economics, which are going to force more people into electric cars in the long term. They will eventually switch back because of these factors. Number one, the charging and electric cars will just get better overall. I mean, the charging is going to be longer distance, the charging is going to be faster, and number two, the prices for electric cars is going to be cheaper. The prices are going to continue to go down because there is economies of scale. There's also innovation. So the price of electric vehicles is going to keep getting lower and more economical, which is going to make more sense for the end consumer. Now, number three, the gas car that they want/need will no longer be available except as used, because eventually there are a lot of laws that are changing. And even with sports cars like Lamborghini, Ferrari, Porsche, they are going towards electric vehicles and they're getting rid of their pure gas cars slowly and surely. Now, whether that's a good thing or a bad thing, the laws are going towards that direction. So being invested in electric vehicles makes a lot of sense, at least having a portion of your portfolio allocated to this area. Now, number four, gas stations will switch to electric charging or basically go out of business in the future, making gas cars harder to refill. This is kind of crazy to think about because a lot of us still drive gas cars, but with the trend, with how laws are, and many other reasons, gas stations are just not going to make economic sense. So there's going to be less gas stations. And as there's less gas stations, people are not going to find it as convenient to drive a gas car, and they're naturally going to switch. And that's why right now we see a lot of early adoption with electric vehicles. Then you see more people adopting it. And then, at the very end of the cycle, just everyone else adopts it because it just makes the most sense. You're almost weird in a late adoption cycle for not having something. For example, like imagine not having social media at this point or not having a smartphone, like still having a flip phone. Most people have already adopted to smartphones, the internet, Internet of Things, and other brands that just make sense. So this is another adoption cycle. Now, NIO is a major player in the electric vehicle industry, which is experiencing rapid growth due to increasing environmental concerns and government regulations favoring EV adoption. Although this isn't even close to my main play or what I typically trade, there are a few things here to really understand and consider. NIO is known for its innovative approach to EV design and technology. They offer features such as battery swapping, autonomous driving capabilities. By the way, I'm super bullish on autonomous driving because me myself, like I have a car out here in Europe, but I don't always want to drive it. So sometimes I just take Uber because it saves me time. Now imagine if you have an autonomous vehicle that can drive you to work, you can save so much time and be more productive. And that's going to increase output and GDP, and more people are going to want to use their time to make more money or just have leisure time instead of actually driving their vehicle. Autonomous driving will be super cheap. And for example, companies like Tesla will even create autonomous driving vehicles that can pick you up without having a driver. So that's going to be amazing because the cost is going to be super low. Now, albeit I don't even know if I would get into a car without a driver, but eventually it's going to be safer, if not already safer, than having a human driver. And look, the advancement of connectivity is also a really big factor here, which could give NIO a very good competitive edge in the market because they have all this innovation, they have this technology, and I think they have a really strong brand. NIO has been successful in building a strong brand image and cultivating a customer loyalty. Basically, their customers are coming back, and especially with battery swapping, although, there's some issues with battery swapping, maybe it takes some time, there is a lot of customer loyalty there because they're coming back to get their vehicle serviced, to get a battery swap, to charge the battery, and they keep seeing the brand, and that's actually a really good thing for the brand overall. Now, their focus on providing high quality products, excellent customer service, and creating a community around their brand has helped them establish a dedicated customer base. Now, for me, kind of what I said earlier, Li Auto is focusing on customer loyalty. Well, this is really smart because having customers come back is pretty much the most important thing in every single business, whether it's a restaurant, whether it's Apple iPhone, whether it's a vehicle, even if it's a long sales cycle, like people buy a vehicle every 3 to 5 years, or even much more than that, right? A lot of people can wait 10 years, but still, it's really important to have a loyal customer base that keeps coming back for more. Just like you guys are subscribed to this channel, I really appreciate you for supporting this channel, watching the videos. I'm always trying to educate you as much as possible and help you make money. Now, this brand recognition that NIO has and loyalty can translate into sustainable sales and market share growth, which could positively influence the company's stock performance over the long period of time. Now, of course, right now the stock has gone down a lot, and people who are holding the stock have felt a lot of pain. However, me, my members, you guys hopefully haven't felt any pain because, well, I'm not in this stock. I am just buying the stock right now after not being in the stock for a very, very long time. I finally see that the stock has pulled back enough to display its value right when it's worth as much as its cash on hand. Now I can imagine myself, well, I put $10,000, but I can imagine myself buying a bit more. I can really see myself dollar cost averaging over time. I'm gonna wait and see and give you guys an update, but the fact of the matter is I mainly look for loyalty and customer experience in a company that I invest in. And that's Apple. Apple has great customer loyalty, and NIO, I actually noticed the same thing. I used to think that I had to wait until, the stock was basically at its very bottom, but the truth is I really don't know, which is why I'm only beginning to invest small amounts of money into NIO stock and basically dollar cost averaging my cash. I also want to take a look at some NIO options, so let's jump into my portfolio and take a look at potential trades. I'm going to be using my Robinhood portfolio, although I don't have NIO in this portfolio. I like to trade options on Robinhood more than my other portfolio, as the trading costs are much less or pretty much non-existent. So looking at NIO, it's actually under $4 per share. So if I go to year-to-date performance, stock is down 57%. Amazing, because I don't have a position on it. So I'm happy to see a stock fall down when I don't have a position in it. That's actually a good thing because this stock has become a lot cheaper and it's become basically what I think is a value company. Now, if I look at the 5-year chart, this stock has done a whole lot of action. I mean, when I was recommending this stock back in 2020, actually, when I was making videos in 2020, this stock was a $4 stock. This is where I was buying it at. I had a little bit of shares at $3.50, and then I had some trouble here as it kind of fell down. And believe it or not, actually, when I bought the stock at $4, I myself was panicking when it went down to $2.67. This was actually a very stressful time. However, I kept holding the stock and I started selling it. Basically, I wasn't smart enough to sell at 61. I'm not gonna lie to you. I just started selling it in the 40s, right? So when this big dip started to happen, I really got out of this stock quite a lot. I was still a little bit bullish on it in the short term. I was trading it, but essentially I lost a lot of confidence once 2022 hit, and I haven't really touched it for a very, very long time. I mean, I've dabbled in it, small amounts, but now I can finally see that it's at a 52-week low. I mean, this stock is right at its 52-week low. If I show you right now, 52-week low is $3.71. Currently, the stock is at $3.79. Here's what I would recommend. If you are still cautious about this stock, I would do this. I would sell a put option that is out of the money. For example, I'm going to go sell put. I'm going to go to something that's out of the money. I can go to June 21. If you're watching this in the future, just find yourself a good value. Now, unfortunately, that doesn't have the best strike prices. You can see here how we don't have a $3 strike price. Might have to play around a little bit, go to July, see if July has a $3 strike price. It does. Right here, you can see that this is a 90 days to expiration as I would open up this position. And the $3 strike right here has decent volume, has really high implied volatility. This is insanely high implied volatility. The bid-ask spread is actually really, really good. So this is a fantastic option to trade. And if I were to sell this put option right here, you can see how I'm collecting $26. I'm risking $274, which is almost a 10% return in 3 months. On an annualized basis, if I were to do this trade 4 times per year, I would make almost 40% on my money. This is a fantastic return. This is basically 2 times more than Warren Buffett gets. Warren Buffett gets about a 20% return. Selling put options on NIO can get you a 40% return. Of course, we want the stock not to crash, but at the same time, if you think about it, this stock is already trading for its cash value. It's worth $3.79. I'm selling a $3 put, which means that you still have a lot more cushion. In fact, this stock could fall 20% down. It'll go 20% down, and this would still be an out of the money option because 20% of $3.79 is going to be like roughly 75 cents. So 75 cents lower is going to be $3.04. So we are going to be still out of the money. The $3 strike is going to be out of the money, even if the stock falls 20% lower. So in my opinion, this is a no-brainer trade, especially if you have a small account portfolio, or if you just want to have some exposure to electric vehicles or China or whatever. You don't have to put a lot of money into this or any money at all because I'm not a financial advisor. I'm just telling you what I'm doing with my money, sharing some advice here. If you want to see all my trades live, you're more than welcome to check out my description. Catch you in the next video.